Good afternoon, this is Tim Wegman with B.I.S. Commodities, taking a look at the weekend review. Taking a look at the corn market, we did see December corn close at 8.07, which was 2 cents lower than last week. We did see new lows this week compared to last week. November soybeans closed at 16.45 in the November contract, which was 2 cents above last week's close. Interesting enough, though, we did see an inside trading week. December wheat closed 7 cents lower on the week at 8.94. The equity markets did see a strong surge this week. The Dow and the S&P both looked to close on their 3-month highs. Crude oil and the energies as well looked to close on a 3-month high. For the grains for the week, we've seen a lot of decrease in volatility as the ranges were somewhat subdued prior to the week going into the report, the quarterly report last week. It seems as if maybe the drought or the supply concerns looks as if maybe it's possibly running its course here for the time being, and if the grains were to take a new leg up, it looks as if maybe we're going to have to see the demand sector push grains to new highs. We did see a little strength coming into the grain markets as the week progressed, mostly led by wheat, as the concerns are that export bans could be put in place, and Russia and the Ukraine came out to mention they would follow those export bans if Russia were to put them in place as well. Some traders were talking about the possibility of those bans coming into play as early as mid to late October, so we did see a two-day strong rally in wheat to bring it up to a 7-cent close for the week. That strength was able to spill over into the soybean and corn pits. Weather wasn't necessarily deemed as detrimental this week with the cool weather and the forecast of cool weather, but not necessarily wet weather for the next 2 weeks, is creating a debate. Are we improving soybean yields, or are we just holding steady? The debate will continue to be raged until the combines roll. Another item of interest in soybeans is China was selling out of their reserves, selling all of their reserves, state-owned reserves, at lower prices, lower than what import prices suggest. So either China is trying to artificially deflate the market, or as it looks that maybe some demand may be rationing, some rationing may be coming into play. Something to keep an eye on as reserves are sold every 2 weeks. Something to look forward to in the next week's grain markets is crop conditions report Monday night. There are expectations that conditions will improve. Also, the Pro Farmer Tour starts next week, which will create a lot of newsworthy items throughout the week. Taking a look at the livestock markets, we did see October hogs trade 68 cents higher on the week. October cattle traded 25 cents lower on the week. We did see limited cash bids this week, or a light cash trade. There was also a cattle on feed report at 2 o'clock this afternoon that showed cattle on feed at 101%, marketings were 100%, and placements at 90%, came in line pretty much with trade estimates. Shouldn't look for a major effect in Monday's opening calls due to the cattle on feed report. The week in review was somewhat of a low week as far as the grains are concerned, and as well on the livestock part of the industry. If you have any questions or concerns about these markets, please feel free to give us a call here at B.I.S. Commodities at 1-800-373-2525.